Welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Regression Residual Reversion. This is a mean reversion strategy with a twist. Instead of measuring how far price sits from a flat moving average, it fits a least squares regression line through recent prices and fades the genuine statistical outliers from that line. By the end of this video, you'll understand the linear regression engine that drives it, the flat slope filter that keeps it out of strong trends, and the reclaim-based entries it waits for. Remember, this is educational information only and not financial advice. Let's start with the big picture. Regression Residual Reversion is a mean reversion expert advisor built for MetaTrader 5, and it was designed with liquid foreign exchange majors in mind, such as the euro against the US dollar on intraday charts. That said, every price read is time frame agnostic, so it runs on whatever chart period you attach it to when you test it. Most mean reversion systems measure how far price has stretched away from a flat moving average, a horizontal reference. The problem is that in a gently drifting market, a bar can look two standard deviations from the mean simply because the mean itself has moved, not because price is genuinely stretched. Regression Residual Reversion fixes that reference. It regresses price against time, fitting a least squares line through the last 40 closes by default. That line represents the market's current expectation of price, given its recent drift. From there, the strategy measures each bar's residual, its distance from the fitted line, and converts that into a standardized score using the regression's own standard error as the natural noise band. A reading of 2.2 or more means the bar is a genuine statistical outlier, far from where the trend says it should be. This approach is suited to a patient, analytical trader who is comfortable with a rules-based, statistical style rather than discretionary chart reading. It only engages when the regression line is flat, standing aside during strong trends, and it never buys the outlier bar itself. Instead, it waits for price to reclaim back inside the band before committing. Throughout this video, we'll frame everything as educational information. Trading carries real risk, and losses are a normal part of any approach. Now let's walk through exactly how the strategy makes a decision, step by step, and it only does this work when a bar has fully closed. First, it fits a least squares regression line through the last 40 closes, controlled by the RegPeriod input. This gives a slope and an intercept, describing the recent drift of the market. Second, it collects the residual of every bar in that window, the vertical distance from the fitted line, and takes the root mean square of those residuals. That value is the regression standard error, a self-scaling noise band that naturally widens in volatile conditions and tightens in quiet ones. Third, it divides the two most recent bars' residuals by that standard error, giving each a standardized score, or z-value, measuring how many regression standard errors the bar sits from the line. Next comes the regime gate, and this is the core of the drawdown control. The strategy takes the absolute slope of the regression line, normalizes it by the current ATR, and only proceeds if that number is at or below FlatSlopeMax, which defaults to 0.6. A steep slope means a real trend is underway, and the strategy simply stands aside rather than fading it. Then the reclaim condition. For a long, the prior close bar must have been a genuine outlier below the line, with a z-value at or below -2.2, the EntryZ setting. The current close bar must then have reclaimed back inside the band, between -2.2 and 0, still below the line. That confirms reversion has already begun before any commitment. The short side mirrors this exactly above the line. For risk, on along the stop is placed a buffer below the lowest low of the two setup bars, scaled by ATR, and the take profit is the regression line itself, fair value, a short and realistic objective. The short is the mirror image. Finally, once a position is open, the stop ratchets to break-even after price advances by the break-even ATR distance, then trails by trail ATR, so a favorable move is less likely to round-trip into a loss. Only one position runs at a time. Here's the heart of the strategy in MetaEditor. At the top are the key inputs. RegPeriod, defaulting to 40, sets how many closes are fitted for the regression line and its residual scale. EntryZ, at 2.2, is the outlier threshold in regression-standard-errors. FlatSlopeMax, 0.6, is the largest slope, normalized by ATR, that still counts as flat enough to fade. Stop ATR multiple and min target ATR shape the structural stop and the minimum target distance. Now the long block. The condition long setup is true when ZPrev, the prior bar's score, is at or below negative EntryZ, meaning it was stretched below the line, while ZCur, the current bar's score, has come back above negative EntryZ but is still below zero. That's an outlier that has reclaimed upward. When that holds, the entry is the ask price. The stop is the lower of the two bars lows minus a buffer of stop per multiple times ATR, and the take profit, FitCur, is the regression line. After checking the risk is positive, within the cap, and the target is far enough, it calls send with an order type of buy. The short block is the exact mirror. Short setup is true when ZPrev is at or above positive EntryZ, and ZCur has come back below it while staying above zero, an outlier above the line reclaiming downward. The entry is the bid, the stop is the higher of the two highs plus the ATR buffer, and again the take profit is the regression line. Down in the send helper you can see the two calls that actually place the orders, trade.buy and trade.sell, each passing the volume, stop, and target. Everything here is for educational understanding. Let's bring it all together on this illustrative chart. Across the top you can see price moving sideways in a fairly balanced range. And that flat behavior is important because this strategy only engages when the regression line is flat. Drawn on the price are three references. The regression line running through the middle as fair value, an upper band, and a lower band, each set at 2.2 regression standard errors from the line. In the panel below is the strategy's real engine, the standardized residual, which measures how many standard errors each close sits from that regression line. It has a level at positive 2.2 and a matching level at negative 2.2, with a zero midline in between. Watch the first few candles. Price drifts gently lower, and the residual in the lower panel eases down from around zero. Nothing actionable yet, because price is still comfortably inside the band. Then we get the key move. One candle drops sharply and closes down near the lower band, and in the panel below the residual dips beneath the negative 2.2 level. That is a genuine statistical outlier. Price has stretched far below where the flat trend says it should be. Notice, though, that the strategy does not buy this bar. It refuses to step in front of a still falling move. Instead, it waits for the very next candle. That candle stops going down and closes back up inside the band. And in the panel, the residual climbs back above negative 2.2 while remaining below zero, still on the underside of the line. That is the reclaim condition, and it confirms that reversion has already begun. This is where the buy entry marker appears. The stop is tucked just below the excursion low, beneath the lowest point of those two setup candles plus an ATR buffer, and the take profit is set at the regression line itself, that fair value reference in the middle. Now follow price forward. The next couple of candles push steadily higher. The residual glides back toward zero, and price reaches the regression line. That's our first take profit marker, a short, high-odds objective as the outlier simply normalizes back to fair value. The long idea is complete, an outlier below, a confirmed reclaim, and a reversion back to the line. Now the market gives us the mirror image on the short side. Price continues past the line and begins drifting upward. Several candles later, one candle pushes up sharply and closes near the upper band, and in the panel below the residual rises above the positive 2.2 level. That's an outlier on the upside, price stretched well above the flat trend. Again, the strategy does not sell that bar. It waits. The following candle turns down and closes back inside the band, and the residual falls back below positive 2.2 while staying above zero, still on the upper side of the line. That's the short reclaim, and the sell entry marker appears here. The stop sits just above the excursion high, above the highest point of the two setup candles plus the ATR buffer, and the take profit is once more the regression line. From there, price rolls over and eases back down. The residual sinks toward zero, and price returns to the regression line, hitting the second take profit marker. Both trades share the same logic in opposite directions: a genuine outlier, a confirmed reclaim back inside the band, a stop beyond the extreme, and a target at fair value. And remember the two safeguards we discussed. The flat slope gate keeps the strategy out of strong trends where fading is most punishing, and once a trade is open, the stop moves to break even and then trails, so a favorable move is less likely to reverse into a loss. Every setup you see here is illustrative and for educational purposes only. So there you have it, a complete educational walkthrough of the Regression Residual Reversion Expert Advisor for MetaTrader 5. We covered the least squares regression line at its core, the standardized residual that flags genuine statistical outliers, the flat slope regime gate that keeps it away from strong trends, and the reclaim-based entries that wait for reversion to begin before committing, all managed with a break-even and trailing stop. Everything in this video is educational information only, and not financial advice, a recommendation, or a solicitation to trade. Trading involves real risk, and losses do occur. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.